Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 12th of March here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Donald Trump follows through on his threat to impose 25% tariffs on all steel and aluminium imports as the EU responds with rapid countermeasures.
The United States pressures Russia to accept a 30-day Ukraine ceasefire agreement hammered out with President Zelensky's advisors.
Plus, a special report on the UK mental health crisis that's driven 500,000 more people onto benefits.
Let's start with a roundup of our top stories.
President Donald Trump's 25% tariff on all US imports of steel and aluminium has come into effect as of 4 a.m. London time, triggering rapid retaliation from the European Union. Speaking hours before the levies were enacted, the US president explained his justification for the move.
Our country had to do this. We had to go and do this. They've taken away, other countries have taken away our business. They've taken away our jobs. I did it initially very strongly against, as you know, China and some others in the first term. And it was a very successful term. We had no inflation. We had the greatest economy in the history of our country.
Trump's decision to press on with the metals tariffs came despite a flurry of last-minute lobbying from US stakeholders, including the country's largest aluminium producer, Alcoa. The company says the charges put tens of thousands of jobs at risk while raising prices for Americans.
The EU has responded to the tariffs with what the European Commission says are, quote, swift and proportionate countermeasures. They will apply to US imports into the EU worth up to 26 billion euros. The retaliatory measures include allowing tariffs that were suspended during Trump's first term to lapse from the 1st of April, and also levies on additional goods to come into force from mid-April. It's a planned step. Here is European Commission President Ursula von der Leyen speaking in February.
We believe that trade wars and punitive tariffs make no sense. Tariffs act like a tax. They drive inflation. The hardest hit are inevitably workers, companies, the small income, the middle classes on both sides of the Atlantic.
Ursula von der Leyen speaking there on the 14th of February. The EU Commission will now consult with member countries on the second phase of retaliatory tariffs, with the goal of bringing them into effect by the 13th of April.
The UK Prime Minister and Business Secretary have both called their American counterparts in recent days to try to escape the effects of the steel tariffs. Bloomberg has learned the UK hoped to secure a last-minute opt-out, possibly even after the levies had begun on Wednesday morning. James Wilcock has more.
US President Donald Trump spoke about a great trade deal when Keir Starmer went to Washington last month. So many UK officials had thought they had a shot at negotiating around the steel tariffs, given Britain's trade with America is broadly balanced. So far, the tariffs are in effect, with Britain's steelmakers calling it a hugely damaging move affecting their second largest export market. But unlike the EU, Britain has signalled it would not retaliate, with the Business Secretary instead this morning calling the tariffs disappointing. In London, James Wilcock, Bloomberg Radio.
The latest global tariffs kick in after a tumultuous day at the White House. President Trump threatened to double the metals tariffs on Canada to 50%, only to back off when Ontario agreed to drop plans to impose a surcharge on electricity sent to the US. Speaking to reporters, Ontario Premier Doug Ford said that he would now be meeting with Trump's Commerce Secretary Howard Lutnick to discuss a renewed trade deal ahead of the 2nd of April reciprocal tariff deadline.
I thought this was the right decision. They understand how serious we are about the electricity and the tariffs. And rather than going back and forth and having threats to each other, we have both agreed, let cooler heads prevail. We need to sit down and move this forward.
Doug Ford speaking there as US tariff uncertainty has helped fuel a 3-week stretch of volatility in global markets. Over recent weeks, Trump imposed 25% duties on Canadian and Mexican goods, then delayed them for a month, then let them take effect last week, then within days offered exemptions that could cover most trade with those countries.
Trump's move to widen his trade offensive comes at a perilous juncture 7 weeks into his second term. The US president's rapid effort to rewire the economy as a global manufacturing power has rattled financial markets, spooked consumers and fueled recession fears. Mohamed El-Arian, chief economics advisor to Allianz and Bloomberg opinion columnist, says the back and forth could cost the US economy.
Companies are just waiting to see what's happening before they commit to major expenditure. The problem is if they wait and see, and if consumers start feeling income insecure, then we could easily talk ourselves or wait ourselves into a recession.
Mohamed El-Arian speaking there as Goldman Sachs lowered its year-end target for the S&P 500 index to 6,200 from 6,500, citing reduced GDP growth forecasts, higher assumed tariff rates and increased uncertainty. On Tuesday, a volatile trading day saw the S&P 500's three-week sell-off briefly reach 10% before a late rally kept it out of correction territory.
Now, to the war in Ukraine. President Trump is putting pressure on Russia to accept a ceasefire agreement reached with Ukrainian advisors in Saudi Arabia. The accord includes a 30-day halt in fighting, but it hinges on the cooperation of Russian President Vladimir Putin. US Secretary of State Marco Rubio says that his administration is hoping for a swift response.
Our hope is that the Russians will answer yes as quickly as possible so we can get to the second phase of this, which is real negotiations, not never-ending dialogue, talk forever, but real negotiations to end this conflict in a way that's acceptable to both sides, sustainable, and that ensures the stability and security of Ukraine for the long term.
That was Marco Rubio speaking after 8 hours of meetings with a Ukrainian delegation in Jeddah in Saudi Arabia. In exchange for Ukraine agreeing to a 30-day truce, the Trump administration will lift its freeze on military aid and intelligence for Kyiv. President Volodymyr Zelensky said in a video address to Ukrainians, Russia must show whether it is ready to end the war or whether it continues the war.
Both ships involved in a crash off the UK coast are now expected to stay afloat. The Solong caused fires and explosions when it ploughed into the oil tanker the Stena Immaculate on Monday. Stavros Karamparidis from the Maritime Transport Research Group says the incident's very rare due to modern systems.
They have sonars, they have AES systems, which is automatically identify the vessel's position real time. And there is always someone on watch on the bridge to see what is happening around. There were some reports there was fog, but still the systems were there to able to avoid that kind of collision.
It's maritime expert Stavros Karamparidis. The Solong's captain has now been arrested on suspicion of gross negligence.
Those are our top stories for you this morning. Let's look at the markets. European equity futures given a boost. They're up by 1.1% this morning. Both the US-Ukraine ceasefire blueprint, also the retaliation, though, from the EU on US-imposed tariffs. The euro this morning is currently trading at 1.0909, so down by 0.1%. US equity futures, muted reaction to metals tariffs. We're up by 0.3% on the S&P 500. But of course, yesterday we saw the market really whipsawed. It closed down 0.8%. There was a late session boost, so it managed to close off its lows after Trump walked back tariff threats on Canada. And in terms of Treasury yields, up 7 basis points to 4.28 into the close of the 10-year yield. We get the US CPI data out 12:30 p.m. Today. Weakness in US Treasuries, also seeing Japanese 30-year yields hitting the highest since 2006.
We'll have more on the tariff store in the moment, plus a special report on the growing number of people in the UK claiming disability benefits for mental health problems. But just another story that caught our eye this morning. Amid the raft of cuts that we've seen at federal agencies in the US, interesting to see that weather forecasters, many of whom would go on to be employed by these agencies, are actually founding a new jobs market in hedge funds.
Yeah, I missed my vocation. I should have studied geography because climate change is having such an impact on commodities markets that actually if you can model weather patterns and basically help firms get ahead of price spikes, then you could be in line for a very big payday. The paychecks are enormous.
Yeah, up to $1 million now for these employees as well. So SquarePoint Capital, Jane Street, DV Trading, Millennium, among those that have been beefing up teams that focus on the weather. Clearly an important investment. Think about just this year, record-breaking cold weather in the US, sending natural gas futures surging. If you can predict these sort of things happening in advance, it can be of great advantage to those trading. And as I say, at a time when jobs are being cut elsewhere, a welcome opportunity for many of these experts.
Yeah, absolutely. One of the stories that caught our eye this morning on the Bloomberg terminal. But let's discuss, of course, the main story today. President Donald Trump's 25% tariffs on steel and aluminium imports. They have come into effect without any last-minute exemptions. The European Union has announced its response, which will come in 2 stages and affects 26 billion euros worth of US goods. For more, we are joined by our senior US government editor, Derek Wallbank, and our EMEA news director, Roslyn Matheson. Welcome to both of you. Derek, Donald Trump has done what he promised to do here with no negotiations, but no deal making either. What's going to be worst hit, do you think?
Well, yeah, the lack of a carve-out was really something that I think was a blow to a certain number of countries, Australia particularly, which thought that they had a path to a carve-out. But it does suggest, look, that Donald Trump is serious as a heart attack when it comes to going forward on the tariffs. He has pledged that tariffs are not only going to be more than they are right now, but are going to generate sufficient revenue to be able to be a difference maker when it comes to his tax and spending plan. So this is really sort of critical in terms of the effect here. You know, I'm struck. I'm looking at a chart of U.S. imports of steel and aluminum. Canada is number one in both. Number one by a mile for the U.S. in aluminum. Number one in steel. Mexico, Brazil, China, Taiwan, South Korea, Germany, Japan, India, Vietnam as the next ones to follow. And so even though you do see this European Union retaliation here, the biggest effects is going to be on some of the United States' continental partners. But bear in mind, tariffs are ultimately things that are paid on the import, right? And so the biggest sort of where is this price going to get paid is going to be on the U.S. users of these who are likely to feel some effect of price increases from the tariffs.
Ros Matheson, turning to you, we've had a response from the European Union, clearly timed to be announced after the measures came into force. What exactly has the EU said it will do?
Well, that's right. In fact, they announced their statement quite early this morning, saying they're going to impose duties on 26 billion euros worth of American goods. And we're getting a few more details on that now. Obviously, they're going to target US steel and aluminum products, but they're also going to look at textiles, agricultural products and home appliances. And they're going to look back at some of the products that got hit in previous trade tensions with Donald Trump. And that's some of the kind of big name US products, including bourbon and motorbikes. Of course, famously, years ago, they targeted Levi Strauss jeans and they targeted Harley-Davidson motorbikes and US bourbon. So we're getting some more specifics on that now. I mean, the EU describes this in the statement as strong but proportionate. They're leaving the door open, obviously, to continue to negotiate on this. They are saying that they can also look to re-up some of the penalties they had previously. They're holding fire on those, obviously, to see what happens with reciprocal tariffs, potentially in a couple of weeks, but certainly coming out of the gate pretty hard this morning, and as they had said they would do, in fact, if these tariffs did take place.
Derek, what do you think we learnt, though, from the clash with Canada yesterday? I mean, an extraordinary ramping up, Trump threatening to raise tariffs against Canada to 50%, but then backing down hours later because of the clash with individual Canadian politicians. What do you think the world will take from that?
Well, look, I think that the world is looking to Canada as the front line of trying to figure out how to deal with Donald Trump. And look, my granddad always used to tell me that experience is the best teacher. Doesn't have to be your experience, though. So everyone's looking at this as an object lesson. To the degree that Canada pushes back, they're trying to see how that works. To the degree that they try and play a little bit of friendly push game, maybe that works. Let's see how that goes. So everyone's trying to sort of get an education very rapidly on how to do this. Now, Canada did take a line similar to what Roz described as the Europeans doing, trying to find some areas that would particularly bite, especially on electricity. Now that was something that has gotten Trump's attention. He has posted about it many times. He has been particularly vocal about that, and using that, maybe coming off of that was maybe a lever. Roz very rightly mentioned, the targeting of red state products like bourbon. I do think that's going to be something that you're going to see a lot more of. Overall, I think you're looking at the idea that there is some space for negotiations still. We are seeing some negotiation, but the trend is towards implementation of tariffs, albeit not at the maximal level that we have been warned of by the Trump administration, but still more than I think markets are looking at. The last thing that I would say is that this is all playing out against the specter of some of these economic moves that we've seen. And even though the White House has downplayed how much they're paying attention to the stock market, they very clearly are paying attention to the stock market, as the event at the White House with Donald Trump shopping for a Tesla clearly showed amid the fall in the stock price that Tesla has encountered year to date.
Ross, thinking about the economic effects of this as well, the European Union had been prepared for this. We've seen that in the form of the response that's been taken. But of course, the economic picture much darker in the EU than it is in the United States. How does this set the stage for potential escalation? We're expecting, of course, reciprocal tariffs to be announced in just a couple of weeks' time.
Well, that's right. And certainly they're worried in Europe about the impact. I mean, Derek was just pointing out, of course, also the potential economic impact in the US. If you see an impact on inflation in the US and really starting to impact Americans there and voters there, that's something that Donald Trump may be attuned to. And perhaps Europeans, the officials are hoping in a way that that does drive some of his thinking, because they are concerned. It's not just that, you get a fall off in European exports to the US, so that market becomes harder and more expensive to access. But also, Derek was pointing out a lot of this stuff comes from places like Canada, and it's got to go somewhere else potentially now. And do you get a lot more Canadian, particularly again in the steel and aluminum space? Does a lot of that come towards Europe? So you get the market flooded in Europe as a result, and therefore you have a real issue about oversupply. And that really affects companies here. So you get a double-pronged effect, which they're clearly worried about, both on the steel and aluminum side. So obviously they are going to wait and watch. They are taking it step by step. They are saying, yes, we're looking at the reciprocal tariff state. They have suspended They have suspended some tariffs on US products. They're due to come back into place, to snap back at the end of March. And that's not a difficult thing, just to unfreeze them and to say that they're back in place. So they do have the lever of unfreezing further measures. But again, it seems like Donald Trump can change his mind very quickly within hours, as Derek was saying. And so perhaps they're hoping that there's a way through in the coming days. The question for Europe really is more who can be the one who speaks for Europe to Donald Trump, who has got his ear, who can get in there and perhaps get him to change his mind, and who can that person be? Because it just doesn't seem as though the Commissioner, Ursula von der Leyen, does have that rapport with Donald Trump. And the question is, can one of the individual leaders perhaps in Europe have better luck?
Well, it doesn't look at the moment like the UK has had the luck that it might have hoped for. It's not been excluded from tariffs. Ros, surely Number 10 Downing Street will be quite concerned about that. What do you make of the tone today?
Well, that's right, because even up to yesterday, there was a sense from Downing Street they were at least hoping for an exemption for the UK, because, of course, things so far had been pretty warm between Donald Trump and the UK Prime Minister, Keir Starmer. They've had good meetings so far. The narrative from Donald Trump on the UK has been quite positive. And it seemed as though he hadn't really focused his eye on the trade side on the UK, and that being out of the European Union that's one of perhaps the one benefit of Brexit, is that the UK is out on its own and therefore off the radar a bit. But as we can see, Donald Trump in this case didn't really want to give anybody an exemption, including other allies like Australia, as Derek was noting. And so real questions now for Keir Starmer and for his government. All that effort, has it really achieved anything? And what can they do now in further conversations? So I'm sure quite a bit of scrambling going on this morning in the halls of power in the UK.
OK, Rosalind Matson, our EMEA News Director, and our Senior US Government Editor, Derek Woolbank, thank you very much for joining us with the latest on this story. Just a couple of hours after those tariffs have come into force, we've already had the responses we've been hearing from the European Union. Worth noting, not much reaction on markets to this move as well. We have seen aluminium prices are up slightly on the day on the London Metals Exchange, but this had been an expected measure. And looking at how markets have moved, the focus does seem to be more on the developments in the talks over Ukraine and that potential for a 30-day ceasefire. Of course, still waiting for the Russian response on that. European stock futures are pointing significantly higher ahead of today's open as well. We did see the euro strengthen yesterday. It's down slightly off its highs, but still trading at 109 against the dollar, which is stronger than we have seen it now for many months. Yeah,
a couple of points that I'd make on the markets, of course. Ray Dalio comparing the current trade situation to 1930s Germany, I think is one thing worth noting, warning that the tariffs could lead to fighting between countries. He didn't necessarily mean military fighting, and he was talking about him being, that he is an observer, and yet I think this sort of raises alarm bells. Goldman Sachs also cutting its year-end target for the S&P 500 down to 6,200. And then although the Tesla share price was up on Tuesday by 3.8% on the day, there was a 15% rout, and of course it is down 52% from the all-time high that we saw in mid-December. So that was the Tesla price action in the market.
Well, to the UK now, where analysis in the Institute for Fiscal Studies says 500,000 more people in England and Wales are now claiming benefits for mental health problems compared to before the pandemic. It's a figure which may add to concerns around government plans to reform spending on welfare. Our UK economy reporter Tom Rees joins us now for more. Tom, good morning. What did we learn from this IFS report?
So it kind of reveals or exposes the extent to which kind of there is a mental health crisis in the UK and how that has worsened kind of our worker participation problem. In the last couple of years, we've seen a lot of workers leave the workforce altogether, and that's led to a lot of problems, such as the amount the government pays out in terms of welfare support. And what this report really does is it sort of builds a picture on why that inactivity has increased, and it seems to show that a lot of it is due to a deterioration in kind of mental health. So that they think half of the increase in working age people on disability benefits since 2019 has been due to mental health, and it is huge numbers. It is like 500,000 people. So it's a lot of people that have left the workforce just because of this one issue, and that's a big problem for the government.
Yeah. So then, what effect is it having basically on the UK economy? And there is some debate about this worklessness, the root of it and how to resolve it. What is the effect, though, actually on the UK economy of what has been a very big, notable increase in the number of people who are too sick to work?
So there's the two main effects. Firstly, obviously, it reduces your labour supply relative to what it would have been. And given our productivity growth is pretty kind of pathetic at the moment, so you're really relying on the labour supply to keep the economy and GDP motoring. So if the labour supply is also misfiring, and as well as the productivity growth, you get what we have at the moment, which is an economy that's barely growing. And the second, which problem is that it's keeping the labour market tighter than the Bank of England would like it. So that lack of available workers is keeping wage growth very high, keeping kind of competition for workers very high, and that's making the bank's job of keeping inflation much harder. And to be honest, that's why the relative to previous interest rate cutting cycles, the UK central bank is really kind of moving at a glacial pace.
Tom, these figures, it's a big number to talk about 500,000 more people. I just wonder, how does this compare to the data that we have for other countries and the number of people who are on illness benefits since the pandemic?
So the idea that kind of mental health has gotten worse in recent years. Obviously not a unique problem to the UK. Everyone went through the pandemic. Everyone's had kind of the rise of social media, cost of living crisis, etc. So there are definitely similar signs in the kind of stats in other countries. But I think what is kind of unique to the UK is that this rise in economic inactivity among workers. So, those people not in jobs and not seeking jobs. That is fairly unique to the UK, that large rise. And, we know we think that's been driven by ill health. And if that is being driven largely by mental health, as this report suggests, then it could suggest that the UK's kind of mental health crisis has actually been worse than other countries in recent years.
But the Prime Minister's talked about the welfare system being unsustainable. The government is looking to cut spending, of course, and trying to find ways to do that. So what changes do you think they're going to consider?
So far, they've been pretty vague about what they might do. And I kind of understand why, because, cuts to benefits are never popular in the Labour Party. We only have to see what... the backlash to things like, the two-child benefit system and the winter fuel allowance last year. So they're talking about things that are kind of maybe looked at, reforms to the personal independence payments could be on the cards. This is given to people to help with the extra costs caused by long-term ill health. There's been some talk in some of the papers of merging certain benefits to give people who've worked more priority over those who haven't. But the bottom line is that, when people talk about reforms in this area, it's about making, them less generous to save money and to try and increase the incentive to work. There's concerns among some people that, these people not working actually worsens their situation. So, means that they maybe should get a little push into employment. Obviously there's people on the other side saying that, are very worried that, support is going to be pulled out from underneath people. So it's a very politically contentious area, but there's a lot of money going into this area. So if they can save any, it really helps the Chancellor.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.